In this TaxSlayer Pro training video, we're going to go through a few scenarios involving the Affordable Care Act forms within the software. I've started my client's return and I've entered in personal information such as name, social security number, address, and so forth, and I'm going to exit the personal information menu. I'm asked if I want to enter dependents now. I'm going to answer this question no. The software asked me for my preparer code. I'm going to enter my preparer code. And at this point, the program asks me, did you have minimum essential health care coverage for yourself, your spouse, and anyone you could or did claim as a dependent for every month of 2014? In other words, did my client have health care coverage for himself and his entire family for the whole year? The first scenario we're going to look at, I'm going to answer yes to this question. The next question that appears for my client, did you, your spouse, or a dependent enroll in health insurance through the marketplace or exchange? In other words, a state exchange or healthcare.gov. And again, for this first scenario, I'm going to answer no. So basically, for this client, I'm finished with the healthcare part of the return. I answered yes to the first question, that my client did have full year minimum essential health care coverage. And I answered no to the second question, did my client purchase health insurance through the marketplace or exchange? So as I said, basically, we are finished with the healthcare portion of this client's return. Now let's look at another scenario. In this scenario, we're going to assume that my client had minimum essential health care coverage all year. So I'm going to answer this question yes. And my client purchased his health care or his health insurance through healthcare.gov. So I'm going to answer this question yes. He purchased his health insurance through the marketplace. I'm going to now exit the personal information menu. And since my client purchased his health insurance through healthcare.gov, he presents me with a form 1095A, and I'm going to insert the figures from this 1095A into the software. Now there's a nice little shortcut to enter my client's 1095A, his health insurance marketplace statement, into the software. If I look up underneath Form Finder, I've got 1095A right here, so I can go ahead and double click on 1095A. 1095A is part of the premium tax credit scenario, and I have the menu option right here, enter Form 1095A amounts. And again, it's associated with Form 8962. So I'm going to go ahead and click on number 4, enter Form 1095A amounts. I'm now presented with this screen, lists the months of the year, and from my client's 1095A for each month of the year, his line 21A totals, his premium amount was $224. The monthly premium amount of the second lowest cost silver plan for his area was $602. And again, reading straight off of his 1095A, the 21C totals, the advance payment of the premium tax credit, were $224. I click OK, and I need to repeat the same figures for each month. Alright, I've finished entering the amounts from my client's Form 1095A that he received from the Health Insurance Marketplace. I'm going to go ahead and exit this menu, which takes me back to the Form 8962 Premium Tax Credit menu, and I notice that my client has an excess advance premium tax credit repayment of $26.88. What does this mean? Well, let's view the 8962. Let's view the form itself and find out. My client exceeded the 400% poverty level, here as shown on line number 5. He was at 436% of the percentage of federal poverty level, which means that because he received a monthly advance payment of his premiums, he's going to owe that money back. So the program calculated that he had an advance payment of $26.88, and because he exceeded the 400% of the poverty level, he's going to have to repay some or all of those advance premiums back to the government. So, how does that repayment of the excess advance payment of the premium tax credit, how does that translate to my client's tax return? In other words, where is that showing up on the 1040? Well, let's go to number 11, View Results, and I'm going to bring up a copy of the 1040, my client's 1040 on the screen, a PDF copy, and let's take a look. I'm going to view the second page of the 1040, and we look here on line 46, Excess Advance Premium Tax Credit Repayment. Shows up on line 46 and actually adds to my client's tax liability. So again, it adds to my client's tax liability, and unfortunately, my client is going to have to pay back this $26.88 in addition to the regular taxes that he owes on his tax return. Now let's take a look at another little scenario here. I've changed things up a bit. For my client, I've lowered his income. So let's view the Form 8962 and see what a difference that made. I lowered my client's income from $50,000 to $30,000, which put him at 261% of the federal poverty line. In other words, it brought him well below the 400% of the federal poverty line. That had a profound effect on the Form 8962 by doing this. Instead of my client having to repay the $26.88, my client has no repayment of the excess advance payment of the premium tax credit. In other words, the total premium tax credit and his advance payment of the premium tax credit balance out and equal to zero. My client has no net premium tax credit and has no repayment of excess advance payment of the premium tax credit. So once again, in this scenario, the figures on the 8962 have balanced out for my client. Okay, let's recap for just a moment. We've looked at 3 different scenarios concerning the Affordable Care Act. First of all, my client carried health insurance all year, did not receive his health insurance through the marketplace, through healthcare.gov. He received his insurance through his employer. Very easy scenario. Second scenario, our client received healthcare insurance through healthcare.gov, but since my client exceeded 400% of the federal poverty line, he had to pay back those subsidies that he received during the year. And in the third scenario, we placed our client's income below the 400% federal poverty line, and my client did not have to pay back those subsidies in that scenario. So let's look at a fourth and final scenario. My client did not have minimum essential health care coverage for the year. I'm going to have to answer this question no. And my client also did not receive health insurance through the marketplace. So I'm going to answer this question no. Once I exit the personal information menu, get back to the 1040 screen, and if I go to the other taxes menu, here, number 7, this allows me to access Form 8965. Notice my client has now received a shared responsibility payment. In other words, he owes the penalty for not carrying health insurance throughout the year. So I'm going to click on this menu option, and let's take a look at the Form 8965. Before we look at that Form 8965, though, let's first look at the Shared Responsibility Payment Worksheet. In other words, how did that $399 penalty get calculated? Well, in general, the payment amount is either a percentage of your household income or a flat dollar amount, whichever is greater. So the annual payment amount for 2014 is the greater of 1% of your household income that is above the tax filing threshold for your filing status. So my client is single. His filing threshold was $10,150. So his household income was $39,850, 1%, $399. Now again, it's the greater of this 1% or a family's flat dollar amount, which is $95 per adult and $47.50 per child under 18, but it's limited to a maximum of $285. So the 1% of my client's income above the filing threshold is his penalty. Now, where does that penalty, that $399, show up on my client's 1040? Well, I'm back at the client's 1040 screen. I'm going to go to number 11, View Results, and I'm going to pull up my client's 1040 on the screen. I'm going to go to page 2 of the 1040, and we notice right here on line 61, Healthcare Individual Responsibility Payment. Shows up on line 61, the $399, adds to my client's tax liability, and affects his total tax that shows up on line 63. So, what are some of the ways that my client might be exempt from having to pay this shared responsibility payment, this healthcare penalty? Well, let's assume that my client applied to the marketplace and received a marketplace granted coverage exemption. He got a certificate from the marketplace, from healthcare.gov. So what I'm going to do is click on menu option number 1 here, Part 1 of the 8965 Marketplace Granted Coverage Exemptions. I'm going to click on that menu option. I'm going to click the New button, select my client, click OK. And my client has the certificate in his possession, and what I'm going to do is enter that exemption certificate number. Each certificate will have its own unique number, so I'm going to go into this menu option and enter the certificate number. And I'm going to indicate the months that my client was granted the exemption according to the certificate. So if I click on number 4, and let's say my client received a full year exemption. So when I exit this menu, exit again, the shared responsibility payment is no longer in effect. So let's take a look at the Form 8965, the form itself, and let's see what this looks like. Now, here's the 8965 on the screen, the Health Coverage Exemptions form. And what we've done in the software, we've entered our client's name, social security number, and the exemption certificate number. And this has essentially exempted my client from the shared responsibility payment. We've gotten him out of paying the penalty by filling out Part 1 of this form. Now, what's another method for getting my client out of paying this shared responsibility payment? What other scenario could we come across? Well, let's look at menu option number 2 here. I've brought my client's household income way down. Remember, at first he was earning $50,000 on his W-2. I changed his W-2 so that his income is below the filing threshold. So the program has automatically picked this up. Household income below filing threshold exemption has been answered yes. And again, this is automatic in the software. Notice the shared responsibility payment is gone. But you can claim a coverage exemption if your household income is less than your filing threshold, which we see. To claim this coverage exemption, you have to first figure your household income. Now, the program has only taken into account my client's income. What we need to do is select the menu option for household income and enter in any dependent's income on the tax return. Now, the program can't figure or can't determine the figure to enter for dependent's income. You have to manually calculate and enter this figure. By entering the dependent's income on the return, this will determine the amount for household income. Now, the household income will confirm whether or not my client still qualifies for the coverage and penalty exemptions according to the regulations in the Affordable Care Act. Then what we need to do is compare the household income to the filing threshold that applies to my client based on his filing status. And if the household income is less than the filing threshold, this box will automatically, or this menu option will automatically change to yes, and my client will receive an exemption from the shared responsibility payment. Now let's look at another method whereby my client might be exempt from the shared responsibility payment. Menu option number 3, gross income below filing threshold hardship exemption. If I click on that menu option, it asks me, are you claiming a hardship exemption because your gross income is below the filing threshold? Now, before I answer this yes or no, I need to understand that we can claim a coverage exemption if gross income is less than the filing threshold. To claim this coverage exemption, you have to first figure gross income. Depending on my client's tax return, I may need to add back the following in order to determine my client's gross income. Now, the software won't make this calculation. I would include only the taxable part of Social Security benefits from 1040 line 20B. Also, I would include gains but not losses. Gains but not losses from the 8949 or Schedule D. Gross income from a business. For example, the amount on Schedule C, line 7, Schedule F, line 9, but in figuring gross income for purposes of the exemption, I cannot reduce my client's income by any losses, including any loss on Schedule C, line 7, or Schedule F, line 9. We then compare the gross income to the filing threshold that applies to my client based on his or her filing status. If the gross income is less than the filing threshold, I could check this box, yes. If we qualify for this coverage exemption, everyone in the tax household is exempt for the entire year. All right, let's wrap all this up by looking at Part 3 of the Form 8965, what we call the coverage exemptions. I'm going to select the New button, select my client, click OK, and now let's look at item number 3, menu option number 3, exemption type. When I click on exemption type, it lists all of the exemption types that are in the instructions for Form 8965. I'm not going to go into them in any detail. If you care to look them up, again, the Form 8965 instructions go into a lot of detail concerning each one of these exemptions. But let's say, for instance, my client, we determined that his coverage was considered unaffordable. Now, again, what we're doing, we're going to use Part 3 of the Form 8965 to claim a coverage exemption on my client's tax return for himself or for another member of the tax household. If there were more people on this return, we would use these coverage exemptions for each person on the tax return. I'm going to enter the code for the appropriate coverage exemption. And again, let's select code A. Coverage is considered unaffordable, code A. We can claim this coverage exemption for my client or another member of the tax household for any month when the lowest cost coverage through an employer-sponsored plan, or if the individual doesn't have access to employer-sponsored coverage, coverage in the marketplace is unaffordable. Coverage is unaffordable if the individual's required contribution is more than 8% of household income. So again, just for my client scenario here, we're going to select code A. Coverage is considered unaffordable. I'm going to click OK. And now I need to indicate the number of months that we're claiming the exemption. I'm going to click on menu option number 4. And we're going to say that my client is claiming this exemption for the full year. I'm going to exit this menu, exit again, and now let's take a look and see what happens on the Form 8965. Here's the 8965 on the screen for my client, the Health Coverage Exemptions form. And if we scroll down, let's look at Part 3. And through the software, we've indicated my client's name, social security number. We've indicated exemption type, code A, unaffordable. And we've indicated in column D here that this exemption is good for the full year. So if I close out the form and notice that the shared responsibility payment is no longer there, that $399 shared responsibility payment is gone. In effect, because we filled out Part 3 of Form 8965, the coverage exemptions. And that concludes the Affordable Care Act training video for TaxSlayer software. We looked at only a few possibilities, only a few scenarios that you may see for your clients in regard to the Affordable Care Act. But hopefully this little training video cleared up a few of the questions that you might have. Thanks for watching.